Hello and welcome to this very special conversation. Joining me today is Lovaii Navlakhi on this conversation, which is brought to you by the Bombay Stock Exchange Investor Protection Fund in association with the Money Mile. Lovaii is one of India's best known certified financial planners. Thank you very much, Lovaii, for coming by and speaking to us. Difficult times we live in. My first question, everybody wants to be wealthy, especially in these difficult times where people have lost jobs, where people have seen a cut in their salaries. How can one go about making sure that once this is all behind us, at least make sure that your financial plan remains robust enough to help you become wealthy with equity?
So I think, Vivek, it's a pleasure to be, recording with you once again. I suppose that the question that everyone has in mind is that, I always want to make more money and create some amount of wealth. Some people start off with targets and have a target in mind, 2 crore, 5 crore, 10 crore. And I think that when you look at over long periods of time, you have two alternatives really to invest if you are experiencing financial markets. One is to invest in things like fixed deposits, where you know that there is a fixed amount that's coming to you. The other alternative is, owning a share in a company. And that really means taking a part of the ownership in the company, and that's really equity. Now, what we have seen is over a long period of time, when you look at the Sensex since 1979, when it was sort of formed and started off, the Sensex has gone from that 100 to close to 40,000 levels today. You've made a nice, healthy return in the Sensex over time. And that essentially has happened because you've been willing to take some amount of risk. Now, investing in equity means some amount of risk, but it also means that there is a alpha that you are getting, additional return that you are getting for the risk that you are taking. And we've seen that over long periods of time, equity really does deliver returns which help you for a rainy day like this. And this is the time we actually advise our investors to take out that money that you had accumulated over the years for the rainy day, because this is the rainy day. Don't worry about not having, not keeping your monies fully invested at this point in time, because you want to make sure that your sort of short-term goals are taken care of. But over long periods of time, beating tax, beating inflation, creating a surplus for use in future, all of that is really possible through equity investing.
All right, Lovaii, thank you very much, like always, for coming by, sharing your perspective and your experience with all our viewers. Thank you once again.
Thanks so much.